Today is Thursday, November 10th, and this is the Dragon Charts Daily Stock Analysis video for the Indian share markets. Let's begin by taking a look at the benchmark Nifty index. In fact, let's look at the ETF, the exchange traded fund that tracks the index. It's called the Nifty Bees. This ETF is designed to track the price movement of the index. As you can see here, yesterday was a down day for the Nifty index. You can see by the red candle here, there's about a 1.2% decline in the ETF. However, what's positive is that the index held up above the breakout level that we recently moved above. As you may recall, we recently broke out above this 3-month sideways range. There was the resistance on the top, and support was down here. And this prior resistance should act as support once the resistance is broken. And so far it has been. Notice that although we pulled back, first of all, the index is holding support at the prior lows right here, and also it's holding above its 20-day exponential moving average, which, by the way, has now risen to converge with this horizontal level of price support. So this is positive. This is positive and constructive price action. What we'd ideally like to see now is for the index to trade sideways for the next several weeks and form another base from which to break out above this high and move above its 200-day moving average. But for now, the price action remains healthy despite yesterday's pullback. As you may recall from our last trade tracker worksheet, there's several stocks that we're positioned in. We no longer use the trade tracker worksheet, but we'll go ahead and take a look anyway at the stocks we're in. One of them was GSFC. GSFC, as you can see here, has been acting very well since our entry. As you may recall, we bought the breakout when the stock moved above this horizontal resistance level right here. We bought this breakout a couple weeks ago, and since then the stock's been marching steadily higher. Looks really nice. Yesterday was what's called an inside day, where the distance between the high and the low of the day was contained within the previous day's high and low. So it was an inside day. However, it's positive that the price action continues higher, and the stock is holding well above its 20-day exponential moving average. If you're long this stock, consider raising your stop, because we now have a gain of about 6 or 7% on the trade. So you might want to raise your stop now to the break-even level. In fact, this prior level of resistance should now act as support. Again, notice how the 20-day moving average has risen to converge with the support. So you can put your stop just below this level right here, which is around 463, would give it some wiggle room below the support. So this stock could pull back a little bit, but the uptrend remains very healthy. Another stock that we're in is Arvind Limited. Notice that yesterday Arvind pulled back along with the benchmark index. You can see the red candle here. It did close below its 20-day exponential moving average, but the stock is still holding above its breakout level right here, and it's still above its 50-day moving average. So no changes to that. We'd maintain the same stop price. Currently, our stop price on Arvind Limited is $92.90, which is below this 50-day moving average. We also are positioned in Bata India long and Tata Consulting TCS short. Neither of those stocks have moved much since our last video, so we won't take a look at those charts. We have made some tweaks recently to the formulas for the relative strength breakout and the pullback scan. You'll now find that both of these scans return less results, which actually gives you better quality picks, less stocks to search through. For example, if we look at the Indian share markets and we do a scan for relative strength breakout, we get 40 results. Now, if we put in a minimum average daily volume of, let's say, 50,000 shares a day, it's going to narrow it down to just 5 results found. But let's take a look at these patterns that it returned. The idea of the relative strength breakout is to find stocks that are consolidating in a base near their highs and are poised for breakout. Stocks that have not broken out yet. So this enables you to find the big stocks that are about ready to make their moves before they actually go. You can see here Idea Cellular came up in our scan. Notice that looking at the 9-month chart here, we can draw a line here to show the very nice consolidation here at the highs. It's holding its 20 and 50-day moving average. So the potential buy entry in Idea Cellular is a move above this November 4th high, which is 98.50. move above this high right here, we'll put it above this declining trend line, and you'll see a nice upward movement if the volume steps in as well. IGL is another stock that came up on a relative strength breakout scan. Here again, we've got a nice tight consolidation. You can see, look at this nice tight range here. We like to see just above the 20-day moving average and just below the 50. And whenever we see action like this, it usually sets up the stock for a breakout higher. So this stock looks real nice above the high of this 5-day consolidation for potential buy entry. We actually like this stock for buy entry above the 429 level. So you can see the improvement in the scan results before it would return many stocks, which were also poised for breakout, but some of them had already broken out. So we've tweaked our formula a little bit now to find you the best stocks before they actually make their moves higher. We've also improved our pullback scan, made the criteria more strict. In fact, if we do a scan now for pullback, you'll get this message that says, the scan is correct, but no results have been found due to current market conditions. Please change your scan criteria. This means the scan is working, but there's no stocks that came up. And that's because the pullback scan is designed only to find stocks that have been in a steady uptrend for a length of time and are now pulling back 2 to 7 days off their highs. So because the Indian share market's been in a downtrend for a long time, there's no stocks that meet our criteria that have been in a steady uptrend for a while. Once stocks have been trending higher for a while, then you'll see results come in the pullback scan. Now, one scan that's working really well right now for the Indian share markets is the trend reversal scan. The trend reversal scan is working well because the Indian share market is actually reversing its trend, as I showed you when we looked at the Nifty chart earlier. Let's go ahead and put in a minimum price range of 100 rupees and a minimum average daily volume of 100,000 shares. And let's just narrow it down to the National Stock Exchange and hit the Scan Now button and see what happens. Okay, we get 33 results. Now what I like to do is sort the results by relative strength. That's going to show us the strongest stocks at the top of the list. And let's take a look at what we get. Okay, here we've got Madras Cements Limited. Notice the trend reversal here for the past year. It's been in a downtrend, but over the past couple months, it's actually reversed its trend. Our criteria for trend reversal indicates that the 20 and the 50-day moving averages must be pointing higher, and we also look for a higher high and a higher low to have formed. Notice this stock has really acted well over the past couple weeks. In fact, if we draw a trend line, we can see the recent breakout level, the breakout above the resistance right here. The stock has broken out above resistance of its prior high, which converges with the 20-day exponential moving average. So this stock is a potential buy entry on a pullback to anywhere near this breakout level. Next on the list, we've got Sri Lakshmi Kotsin Limited. This stock also has formed a higher high and a higher low. The 20 and the 50-day moving averages have crossed up through the 200-day moving average. Notice a nice consolidation here near the highs. This stock could also be bought on a move above the high of its sideways consolidation. Take a look at the next stock, Bombay Dyeing and Manufacturing Company. Here again, the stock has moved above its prior highs, formed a higher high and a higher low. 20 and 50-day moving average crossing up through the 200. And actually now this stock is on a pullback to its 20-day exponential moving average. So we like this stock now for buy entry above yesterday's high of 416.45. So to save time, I'm not going to go through all these stocks, but there's only 33 stocks returned. You could go through all those in a matter of less than an hour. And in a matter of very short period of time, we've actually found the best stocks for you, stocks that are reversing their trends and stocks that are poised to break out. And we did this through the DragonCharts stock screener, saving you hours of time in finding the best stocks. So we recommend you take a look at some of these stocks. Do the same screens that we did. You can look at the results. And the ones that we showed you in our video today, you can actually write down the potential trigger prices for potential buy entry if you desire. This is not a recommendation to buy or sell any of these stocks, but this is simply an educational look at how well the stock screener helps you find the best chart patterns. Good luck in the markets today, and we'll see everybody with our next video to be produced on Monday.